test 38.2% before I feel comfortable playing a reversal bar off of it. Okay, and sometimes I still, depending upon instinct that we were talking about earlier, sometimes my instinct may lead me different, and sometimes it works for me and sometimes it don't. That's why I don't listen to instincts most of the time, unless the instinct confirms a trading decision based on the analysis. So now we can see here we're walking up the ladder, and we're getting close. Okay, and I would definitely not expect price to break above the trend line, okay, because then the trend will be broken. So we're looking to go with the trend until we see that the trend is broken. So any questions about Fibonacci at this moment?
Yes, I have one question, Jerry. The way we drew the Fibonacci in the direction of a trend.
Yes.
I understand that. Now, a low. Do I have to see, let's say the price is in the middle of nowhere and I have no supports below me.
Mm-hmm.
If I would like to do the Fibonacci on its own, in order to have the low, I have to have a reversal to at least anticipate that this low is in place, correct?
At least a green bar. It doesn't have to be a reversal. Yeah, a green bar.
Oh, I see. Okay,
yeah.
I got it. I'm clear on it right now.
Okay. So, for instance, here, before this bar formed, this bottom here, when I saw this green bar, my Fibonacci would be here. Okay. And so then I'm looking for it to come up and see. Okay. Here's the first green bar, first low. So this is where I would have drawn the first one. Okay. And you can see here we didn't reach 23.6. Okay, from here, this bar. So then once we get this bar, then we adjust it, because this is a new low bar now. And after this bar, we have 23.6, and you can see it formed resistance. And it actually formed a bearish reversal bar here. However, it's still within the range of this bar. So this is the key bar here. This is the range bar. So even though we have a bearish reversal here, I'm sorry, did I say bullish the first time? I meant a bearish reversal bar here. Remember what I said earlier. I don't trust any move that hasn't tested at least 38.2. Okay, and so here I would not have tried to enter on this bearish reversal bar for two reasons. This is an inside bar. We didn't break. We didn't reverse below it. Okay, and we have not yet tested 38.2 Fibonacci. And just as a side note, once again, this is a range bar because of the length of the bar, and our range bar rules tell us that most of the time, if we have a long down range bar, price is going to at least test the top of that range bar before continuing down. Okay, if we have a long green range bar, price is going to usually test the bottom before continuing up. So this is how we just start putting our analysis together if we don't want to just use Fibonacci, individually by itself. And believe me, it works much better when you use the other support and resistance levels along with it. But in any event, we don't have to predict, and this is another thing people do. They want to predict which Fibonacci level. And there's nothing really wrong with that in my eyes, but it's just not as safe, as long as you know that it's a lot more riskier. But the most simple method is when you see a reversal bar at a Fibonacci level. So when we're on the way up, see how we're on the way up here, we don't have one single bearish reversal bar, okay, coming up above 23.6. Even though we have some down bars, see, we don't have any bearish reversal bars. So coming up here, until we see a bearish reversal bar, and we like to see a reversal below 61.8. 61.8, okay, on the way up, that's like the threshold that tells you that the trend is potentially changing. Okay, on the way down, 23.6 is the threshold. Okay, so if this turns back down, and then it can come back down to 23.6, okay, but if it doesn't break below and close below 23.6, okay, we still have to assume that this up move is still going to be in effect, even though we want to get in at 61.8 or 78.6. Okay, and we may catch this move all the way down. Okay, but if it doesn't break and close below here, that's a signal that the trend is probably going to change and go up. And also, when you, for instance, if we're looking to go long here, okay, we enter at 23.6. The most easiest and simple thing to do is say, okay, I'm going to take profit at 38.2. Okay, then we get a breakout at 38.2 if you want to re-enter again. Okay, if you get in at 38.2, you take profit at 50. So wherever you get in, if you take profit at the next level, it becomes easier, you know, to figure out where you really want to take profits. But really what I like to do, because I'm a little greedy sometimes, I like to go 2 levels. And a lot of times the market will move 2 levels. For instance, if I get to 50, if I go, if I go long at 23, I like to take profit at 50. If I go long at 38, I like to take profit at 68. Okay, and if I go long at 50, I like to go 2 levels up to 78.6. Okay, but now that's kind of tricky because at 50, you really want to take just 1 level. Okay, because this is the threshold, trend threshold level. On the way down, if you go short at 38 instead of taking profit 2 levels down, I'll go ahead and take it at 23 instead of the 2 levels. So, but these are just little personal nuances that I'm giving you a little insight on how I look at it. But in the end, we want a synthesis between, you know, what I do and what you're already good at. So any more, before I go to the next stage, any more questions about Fibonacci right now?
No, I like to keep it simple as it is. So
okay, great.
That's why I need to know. Thank you.
Great. So I'm going to take them off now. Okay. And now let's go to our bar here. So now, if we're anticipating this move to turn back down and start going back with the trend, okay, now on the way down, okay, we have to determine our support levels, okay, because our support levels, let's start with our first one. Okay, we're here, okay, so what we want to do is look for the first bear pivot below us current price, okay? And look for the swing bar, okay? And draw your line at the top, okay? So on the way down, that's first support, okay? Now above us, we're standing right here, we're standing on the chart. Now we're looking down below us and we're looking up over our head. Now since down below we're looking for the first bearish swing bar, and up above we're looking for the first bullish swing bar. So we're here and I go left, and the first bullish swing bar above us is this red bar here. Okay, so that's our first level of resistance. Okay, and the range of the bar and the high of the bar is maximum resistance. So that's okay. So that's maximum resistance. So we wouldn't expect price to close above there, but we're not in anyway. So this is just a bias that, but we're not going to do anything until we see a signal. But the main thing is that now we have our first level of support, our first level of resistance. So now let's look on the way down each step or each level that we will have to clear if we're going to continue down. Okay, we're already here. Bear swing bar. See, so now below that, where's the next bear swing bar? Right here. Okay. Below that, where's the next swing bar? Right here. So we're here, bear swing bar, bear swing bar, bear swing bar, okay? Level 1 support, level 2 support, level 3 support, okay? Now that's the first bull swing bar above us. Now where's the next bull swing bar above us? And I'm looking and I see to the left. It will be this bar here, okay? And because here, this is a swing bar. All these other bars are still in the range of this bar. So this would be the swing bar here. It wouldn't be a pivot point created until it closed above the high of this bar. And we got that on this gap bar here. Okay, so this is a swing bar. So that's double resistance here because we got swing bar resistance here and we got swing bar resistance here. Okay, so on the way up, that's level 1, level 2, and let's see here, I'll call that level 3. And it's important, whichever time frame you're trading, you use the levels from that time frame if you want to stick with that time frame. But like if this is the 1 hour chart, okay, and what I like to do is draw my levels off 1 hour because 1 hour has the most volume of any time frame. So the moves are relatively reliable and can be expected to follow through or follow form. Okay, but now we have our 1 hour lines, but now if we want to fine tune our entry and exit, we just use our 15 or 5 minute chart on our